Hello, everyone. My name is Clément Gignac, Senior VP and Chief Economist for IA Financial Group. So over the next 5 to 7 minutes, I will try to talk about this market turmoil and this ongoing recession already started from my point of view, and what can we do about that, okay? So usually I start with the big picture, and after that I go with the investment conclusion given the big picture. You know what? As opening remarks, I will start with the opposite. What we can and consider what's going on the last 3 months. So even last Monday, we have a 12% decline in the one single day. It was the worst sell-off in Wall Street ever since in 1987. It was in the top three, as a matter of fact, among since the 30s. So this is, make no mistake, this is not the first time we have a correction. We have seen a correction 10% plus, 33 times since 1950, but bear market, more than 20% that happened only 11 times in the past, now in the 12 one. And in fact, usually it's over many weeks and months, but this time only 23 days trading session, and whoops, we have a bear market, and now we have reached as we speak, in fact, too recently, minus 28, minus 30%. Usually, it's associated to recession. When you have a recession, it's around 30, 35%. When you have a crisis like 2008, it's more than 50%. So what can we do, and what's going on, and are we heading to a recession? Okay, make no mistake. Yes, we started recession, but recession, it's not a depression. It's a contraction of the economy. It could last maybe for 3, 4, 6 months, depending if we find very soon a vaccine for the coronavirus, and that depends on the reaction of policymakers as well. Of course, that could influence. Yes, company will be hurt with their profits and so on, but you know what? At some point, we will find a vaccine, and the sun will rise again. So yes, central banks do their best, but the central banks is not really the solution. That help, that provides liquidity. You have noticed that now they have released the capital buffer for the banks, because in 2008, 2010, I've been the privilege myself to work in the G20 with Mr. Flaherty. We have to fix the financial system was broken. This time, the financial system is not broken. It's basically like a 911 or earthquake. So we have to do something to take care of the workers who are temporarily off, to be sure they have revenue. They could go with the grocery, and we have to support the workers who have temporarily off, and for the people as well affected by the coronavirus. So, yes, they have increased interest rate, but do not underestimate, what in fact a policymaker could do. I've worked, as mentioned, in the finance department, and I know they have all the tools in the G7, and now the consultation is already started. In fact, they have a conference call in the G7 leaders last Monday, and now they try to coordinate an action to inject a lot of cash in the system. Yes, not only central banks, but people receive directly check. So I think that you will see some announcement of Mr. Morneau, Mr. Muchin, and Kurt. They have different assumption. I'm not the crystal ball exactly, but I could tell you what I recommend is to send directly money to the workers who are temporarily laid off, to support, in fact, their revenue. Because if they have no revenue, you will go to a big depression. So these people have expertise. They have learned about the crisis to avoid the crisis like 1930, and they have all the tools available to do that. So usually a finance minister go with the parameters and what is maneuvering room to stimulate the economy. This time, forget the deficit. Canada, maybe it will be down the road 80, 100 billion deficit, 4-5% of GDP. In US, it's already 4% of GDP annual, so maybe we'll go to 8-10%. So the top priority is not the deficit, it's to be sure that people could be there when the economy will start again, because we'll find the vaccine. So you need that the airline company is still there, the cruise boat will be still there, and you will have some workers to support that. But don't be surprised in the meantime that you will have maybe a break for the mortgage payment, So for people losing their job, I will not be surprised if they announce that they will have a break postponed by 3 months or 6 months in a payment. So make no mistake, the debt is not disappear, but you will have a break on this one. Maybe they will cut temporarily the GST, for example, in Canada, to encourage people to spend. For people like me and people watching me, they have their job. We have to encourage them to accelerate maybe their intention to go with bike tickets. So there will the big tickets, excuse me, that will support a lot of jobs. So do not underestimate the capacity of policymaker to support. What about the market? You know what? The market will take care of it himself. The reason we have dropped so fast is maybe due to the quant, the algorithm, and we have this. Now we have no longer broker and banks who really support, contrary in the previous decades. So we have to make our own judgment. If we have to stop all the transaction for 3 days, that people take a break, just like 911. They have closed the stock market during 3 days. They have a lot of inconvenience. This is not their first choice. I think they remain open, but be careful before thinking that it will be the depression and it's over. So my recommendation, you know what? Take care of you, take care of your family. It's the top priority, of course, and have a longer time horizon. You know, when your stock market is not to buy a car in the next 6 months or a condo, it's because you have a financial planning for your RSP and your retirement. So when you have a longer time horizon, it's very unusual that you lose money when you have 3, 4, 5 times years time horizon. When you have only 3 months or 3 days, who knows? Huh? I'm not the guru. So for me, when I see the banks, for example, would have a good balance sheet, a good dividend yield, in fact, a 4 or 5% return, dividend yield, excuse me, and the bonds who offer 0.5, if you have more 3-5 years time horizon, you know what? I think that I prefer the banking stocks. It will not fail from my point of view, because all the regulators and central banks, as mentioned loud and clear the last 3 years, that the banking system is very resilient to any recession. So they will take care to be sure that the banks will be still there, because we need them for the economy. But we need to support the workers, and this is their top priority. So make no mistake, this is the uncharted territory, what we experiment recently. I'm not a doctor. I don't know when the vaccine will be fine, but I'm sure the sun will rise again. I'm sure we will be able to fly again and have a cruise for people there who like to go with cruise boat. So this is my advice. But since each of us are different, have a different time horizon, risk tolerance, I really encourage you to sit with your advisor and discuss about that. Hoping that this little video gives you food for thought, and I'm there to support you. So Clément Gignac for IA Financial Group. Food for thought. Have a good day.